Hi guys, welcome back to our YouTube channel AlgoWise. Um so in the last video, if you remember, we had discussed about the impact of US inflation data, and at that point of time, there was quite a bit of a downside in the market, and Pratik had explained the impact consequently on Indian markets as well. So yesterday we had one more very important piece of data, that was the Fed, hiking rates, that is 75 basis points, and that had immediately jittered the markets, and S&P 500 had gone down. So let's hear it from Pratik. So what he has to say on what's the direction of the US markets as well as our Indian stock markets. Pratik, welcome.
Sure, sure, Kalyan. So first of all, to start with, let me give you the direction of the market after the Fed policy, and I will also tell you what exactly happened. I mean, what did the Fed say, and how market reacted at that point of time, right?
Okay.
So let me show you the Fed's. Let me show you the S&P 500 chart, which is sort of one of the heavily tracked market whenever such kind of event happens, right? So in the daily chart, you can see that we basically went down quite significantly. But let me go to a very smaller term chart, let's say the 5 minute chart, right? Let me show you what exactly happened during the times of Fed. So initially, Fed announced a 75 basis point, and it also announced the dot plot, which basically means that there are different members of the Fed, right? They will provide a plot saying that, okay, this is my view of how the interest rates will look like in the short term, in the long term, and all those things, right? So at that point of time, it was seen that 75 basis point was widely expected, and it was according to expectation. But at the same time, the expectation was that the terminal rate, which means the rate at which the Fed will finally stop hiking, was something around 4 to 4.25%. Around that range, it was roaming. But
Okay.
when the Fed announced the dot plot, it was seen that majority of the members see the Fed rate to be around 4.5% or even higher than that, 4.5 to 4.75% terminal rate,
Okay.
which basically meant that the expectation for rate hike in the future went up quite substantially. So if you can see this, this is the probability of 2nd November meeting. 2nd November meeting was widely expected to be 50 basis point earlier. Now it is widely expected to be 75 basis point, 66% probability of a 75 basis point, right?
Okay.
So that's the change that sort of happened basically. Like 1 week ago, you can see that the probabilities were quite different. I mean, people were thinking that 1 month ago it was even quite drastically different. We were thinking that we will not even go to 350 to 375. Now it
Correct.
is
Correct. And
widely
we
expected that
discussed
we are
also
going.
about that, I think, in the second last video.
Yes, yes, right, right.
Mm.
So
Okay.
yeah, you can see that the rate hike expectation is always going up. I mean, it's not that Fed will pause. It's not looking like that the Fed will pause, right? At least in the short term, that doesn't look like that. But let me show you other things that happened. So after that, see, after that the market suddenly went up. You can see this movement up, right? What happened is the Fed gave some statement, right? Let me show you the statement. Initial statements were more hawkish, like FOMC sees inflation risk made to the upside. But here, when Fed said this, at some point it will become appropriate to slow the pace of hikes. As soon as they said this, the algos picked it up and they said that, okay, the market is going up. Then the market basically went up, right? But after that, again, the Fed came and gave a statement. Uh, to continue making decisions meeting by meeting, which is also fine because people thought that, okay, in every meeting uh, we will see the economic data, and based on that things will change, right? But after that, he said that, I mean, the Fed said that so far only seeing modest evidence of labor market cooling off. We are at the very lowest point of what is restrictive,
Okay.
right?
This
Look
statement
at
was
this.
not, anybody would understand this statement. I mean, this was not at all
Yeah,
positive.
exactly.
Mm. Okay.
So then again, they said no one knows we will get a recession. If so, how deep it will be. So Fed is tasked with doing some job, but it says that okay, no one knows what we are
Hmm.
doing. So how is the market going to interpret that? Then there
Obviously.
is a fairly large group. Yeah. So after that, there is a fairly large group that would see 100 basis point by year end. Median policymakers, no, this is fine, but MBS sale. Now, what is MBS? MBS is basically mortgage-backed securities. When somebody purchases a house, that house together can be pooled together and it can be sold as a security to different investors. It
Okay.
can be sold as small securities, right? So those MBS is being owned by the Fed to a large extent because what happens is that in US there are some agencies called as Freddie Mac, Fannie Mae who hold these MBSs. Basically, they buy the MBSs and they issue it to the investors. Now, Fed also goes in the open market and buys MBS. When they used to ease policy, then they used to buy either government bonds or MBS to a large extent.
Okay.
So now, because they are restricting the policy, they are basically either selling the treasury bonds or whatever treasury bonds are maturing or MBSs are maturing, they are not really going and buying back that amount of MBS, right?
Okay.
So MBS sale would mean that they are outright going and selling the sale in the market. So what they're saying is MBS sale is not something I expect to be considering in the near term, which is still a good news basically, because if they start selling the MBS, then there will be some impact in the market. Then after that, they said also one more thing: housing market may have to go through correction. After they said this, housing market will have to go through correction. The market got it. Market
Um,
sold off heavily. Look at this
okay.
sell-off. After that, the sell-off basically continued.
Oh,
That
okay.
was
Okay.
sort of the last state, and the sell-off sort of continued.
Okay.
Right. So this is what happened. Now, along with the Fed, so Fed is very hawkish in terms of its policy statement, in terms of whatever it said about the rate hikes in the future, because future is also important. If Fed, if it would have been that there is a 100 basis point hike and there is no hike in the future, then also market would take it as bullish, right? Market would be happy about it. But that's not the case. The rate hikes are going to continue. But the problem here that I have, Kalyan, is the Fed is probably, I mean, we nobody knows for sure, but probably a policy mistake has been made already, because the rate hikes take some time to work through the economy. It
Correct.
does not happen
Yeah.
that I hike the rate today and tomorrow itself the economy will absorb all the impact of rate hike. It does not happen like that. It has a lag period of 4 months in which the economy gets adjusted. And if you keep hiking rates every quarter and you keep increasing the expectation of rate hikes, nobody in the market knows that what is going to happen. And I'm not just saying about the market, but the economy. The economy doesn't know. The bank doesn't know at what rate it should start lending. Nobody knows at what rate it should start doing the business, basically. So the business sentiments will get impacted. And with higher rates, when people are not really looking forward to, let's say, lend money, at that point of time, the economy can get stagnated. I will show you one more ratio that will show you what's happening with the economy, right? I will show you the M2 money supply. I think, Kalyan, you can link one of our earlier videos
Yeah.
where we
Yeah.
spoke
Correct.
about, let's say, uh, bond market and M2 money supply. I'm not
Yeah.
going to cover that once again here, but look at the M2 money supply that is going on right now, which is the total money supply of the market, right? Almost the total money supply. If you see the last 5 years, we have been going up. That's fine. If you look at the last 1 year, you can see the flatness that has come from March 2022. We are flat. We are, in fact, we have gone down from the March 22 levels, right? And I am just showing you the July numbers. August numbers, September numbers would be probably worse than this. And with this pace of hikes, when the lending is not happening, the M2 money supply will not grow. It
Correct.
will
Correct. Yeah.
basically probably fall. At this point of time, maybe because of the velocity, which means people are spending more, because of that, the economy was still afloat. If people stop spending more, if people basically start spending the same amount of money that they were spending earlier, then probably the economy will contract quite significantly. Now, if you look at, there is something called as Atlanta Fed, right? Atlanta Fed basically does a GDP now forecast, which means that standing today, what is the forecast of GDP for this quarter? So we are looking
Okay.
at quarter 3 now, right? We are in quarter 3. So you can see this GDP now estimate also. you can see that GDP now estimate is going down. Like it's somewhere around 0.3% on 16th of September. Sorry, after 16th of September, whatever forecast they had released was 0.3%. We had two consecutive quarters of negative GDP growth. Now this,
Correct.
if this becomes like from 0.3, if it goes below zero, that means we'll have a three consecutive quarters of negative GDP growth now. So we are looking at a bad market. We are looking at a situation where things are not getting well. And the inflation is happening not just because the economy is doing great. It is also happening because there is some sort of supply problem. There is some sort of post-COVID impact. There is some sort of supply chain shortage. Then there is this Russia-Ukraine war, which is escalating, because of which
Yeah.
gas prices have gone up.
Yeah.
So there are a lot of different things or factors which are impacting the common man, because of which inflation is going up. Now, how much will rate hiking help the economy? I'm not very sure. Maybe it will cause the economy to go into recession, and the inflation may come down for some prices. Maybe the healthcare inflation will come down, housing inflation will come down, which will finally show that the inflation is under control. Uh, but it will destroy the economy basically, because ultimately if you look at the debt to GDP ratio of all the major countries including the US, it has gone up substantially. Look at the debt to GDP of US, right? So you can see that in the last couple of years it has gone up substantially. Look at 2009, it was 106%. Now it is at 137%, right? Now, how does government pay back its money? It basically pays back by either raising new debt or basically getting the taxes, right? It has to get the taxes. So if you contract the GDP nominally also, then probably the taxes are going to be materially lesser. And then paying back the debt becomes a more difficult issue. Or
Correct.
if you don't increase the GDP, this ratio will not increase, right? If you basically keep slowing down the GDP, basically, this ratio will again keep going up. So that's not a positive thing to be doing in the economy at this point of
Correct.
time.
Correct.
So
Correct.
let's see. Now my expectation is that after this rate hike, when we come to November, we will already have a very bad market. My general expectation is that the market may remain bad, especially because of the Russia Ukraine war escalating at this point of time. So because of that, the Fed may actually slow down its pace of hike, or it may reconsider what needs to be done. If that happens, maybe the economy will get some respite. Otherwise, it looks like the track that the Fed is following right now is a sure shot track to recession. If they hike 75 basis point again in November and 50 basis point again in December, I don't think the economy will withstand the rate hikes. I mean, because it takes some time for the economy to absorb the rate hikes. And that is why the market is broadly expecting. If you look at the Fed is still saying that in 2023 will not cut rates, will still increase rates by 25 to 50 basis point. But the market is widely expecting that in 2023 there will be rate cuts. So the market
Okay.
does not believe the Fed. Market believes that okay, after you do all this, there will be a bad recession in the market, and because of which you will have to cut rates.
Got it. Okay.
So
Okay.
that's the general.
Mm-hmm.
So yeah, that's basically about what is currently happening. And last time we discussed that it's probably not a good time to be in the market, and to wait for some time. I think the same stance can currently remain, that we have to wait and watch. It may be possible that we get a buying indication, uh, like for the short term traders, specifically for short term or medium term traders. Maybe we'll get a buying indication at some point of time, but right now it doesn't look like that. I mean, if you ask.
Okay. And what about the Indian markets? Anyways, we'll be having a RBI policy meet also, right? Next month, sometime 4th or 5th.
Yes, yes. Look, from the Indian market perspective, there are some problems which are also brewing. One thing is that the natural gas prices uh, that uh, that are that was being supplied earlier has gone up substantially. The natural gas prices have gone up by two times, because of which you are having this problem that now the inflation may again start going up. And the wide expectation is that the RBI will again hike rates by 50 basis point, because the inflationary pressure has gone up it was at 6.7%. From that, it has gone up to 7%. And entire world central banks are raising rates. So to save the rupee, the RBI may come and again hike rates by, let's say, 50 basis point. So that's not a very positive thing for the market to look at,
Yeah,
because if you have a situation where inflation is not very entrenched, but we are still hiking rates, then we are in some trouble, even from the Indian market standpoint. If you look at the Nifty, which is sort of one of the strongest performer basically in the last couple of months, because look at this chart. Basically every market seems to have gone down substantially in the last
yeah,
couple of weeks, but Indian market has stayed in range. It has not gone down substantially, but it
yeah.
also means that there is a possibility that the fall now gets escalated. If there is a breach of 17,500, there is a likelihood that it will basically go down quite substantially. And see, now there will be people, I mean, there will be people from the Fed who will come and start giving some reassurances that, okay, market, do not go down so much. They will not say in these words, but they will mean that, okay, market, let's wait. But the market will now be worried more about the growth. It will not just be worried about what the Fed is saying. Market will be worried about the growth, because
Correct, correct.
growth is something that is not happening already. We are already seeing that. And if there is no growth, the corporate earnings will also come down substantially. And in India, there are a lot of companies which do export, and they are dependent on exports basically, right? For example, the software companies, there are some other companies which export a lot of goods outside the country. If the global growth suffers, then they will also have a earning deterioration, and
Correct,
that
correct.
will be something that the market will watch out for significantly.
Yeah. And just out of curiosity, so a lot of the past trading sessions, if you see in Nifty, there were like gap up openings or gap down openings. So mostly it has it has not remained in a particular range. Maybe if you consider the previous days a low, previous days high, something, it has always done a gap up or gap down. So these were mostly driven by news or something which had come in the US markets later in the evening, and then that got factored in the Indian markets next morning, something like that.
Yes, that's what happened. I mean, see, normally Nifty has been trading with a positive bias. So even if
Hmm.
there is a small increase in the US market, there was a gap up opening. This happened when there was a small increase in the US market, mainly driven by bad data. So I spoke about bad news is good news sometimes,
Correct.
right?
Yeah.
Because so with the bad news, there was some increase in the US market, not substantial, but because of that, the market gapped up. Then gap downs happens because of the Fed policy and many other things that are happening. But it is generally trading with a stronger bias, basically. I mean, if you look at the Nifty, I mean, if somebody wants to make some cautious buys over here, it may be a time to make some cautious buys, but not going all in basically, because there is possibility of further down downtrend. Um, but at the same time, it's like the Nifty has been very strong compared to all the global markets. So that is one thing that the investors can take some respite in, saying that, okay, the Nifty is doing well compared to other markets. But at the same time, if the other markets or the S&P keeps dropping and there is a global growth scare, then definitely Nifty can also get impacted substantially. From the valuation perspective, Nifty is at a reasonable value. If you look at the Nifty EPS, it is substantially good. And if you look at the price to earning ratio also for the Nifty, it is not doing bad. It is just at 21.2
Okay.
trailing EPS, right? So
Fairly.
it is
Yeah.
not,
Hmm.
yeah, it is fairly valued. It can also go up if there is, if the global growth uncertainty and the macro uncertainties go down, then definitely it can go up. The PE can expand from 21 to 24, 25 levels. And also
Okay.
there can be earnings growth, right? But it all depends on the macro uncertainties. If that doesn't become, excuse me, if it doesn't become better, then yeah, it can also go down. I mean, the PE can compress as well.
Okay. Yeah, and one more thing which I wanted to talk about, if you have seen in the recent news, like Gas Authority of India Limited, GAIL had purchased from the spot market, whatever deliveries they had asked, they had done a contract with from this company, Gazprom Russia, that those deliveries were not done, and then they had to buy from the spot market at quite a higher price. So those kind of things will also impact the entire, because natural gas is used by a lot of industries, right, for their work.
Yes, yes. Industries as well as consumers, right?
Consumers.
Consumers will also take the natural gas because gas is one of the main, I mean, it's a cooking gas that Indians use basically. So the cooking gas supplies are dependent on natural gas. And the import of natural gas is more than 50%. 50% of the requirement is basically imported. So if the import price goes up substantially, there can be increase in natural gas prices, which can again feed into inflation. So
Yeah.
those are the things, and inflation becomes sticky at some point of time because people say that okay, there is so much gas price, so I need more for this service. So it's kind of a effect that comes into play.
Okay. Okay. Okay.
So yeah, there can be some impact because of that also, and there can be some impact to earnings also from that perspective.
Okay. 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 Fine, Pratik. I think. Uh, okay, so we discussed quite a bit about this entire thing, and let's see. Anyways, a lot of things are coming up. Maybe after November 4th. So there would be this RBI policy meet. So we can uh, expect some reaction from the market on that day too. I think 4th or 5th, whatever, the next policy meet. And then we'll
Yes, yes.
continue discussing this based on the events.
Yes, yes, right, right.
Okay.
And yeah,
Yeah.
it is sort of a time where, I mean, if investors want to take a cautious buy in some good companies, in let's say cash heavy companies, I think that can be a possibility. It may, the good companies basically may not go down very substantially. Those companies may actually keep doing well. So there has to be judgment based call for the investors to take into take positions into some good companies. Maybe in the short term also it can yield some results.
Okay. Okay.
But the
Okay.
overall macro scenario is still not looking that great.
Yeah. Yeah. Correct. Correct. Okay. Okay. Fine. Pratik, thanks for joining. So we'll end this video here, and then we'll meet up in the next video. Yeah.
Sure.
Thank you.
Thank you,
Thanks for
Khalid.
joining. Bye.